You can eliminate financial variables outside your control.
Outside your control? I thought we were always supposed to control what we can control. What do you mean by outside of our control?
Well, Troy, but whether it's doing what you do with IULs or what I do in helping people implement an infinite banking concept using whole life insurance, there seems to be a lot of pundits out there that always think that there's a better way of creating a system of many different products, many different strategies, many different variables, usually under the premise of creating a better rate of return. Have you ever heard of that one?
I have, yes.
Yeah. But along the way, they bring into play variables that are well outside their control. So, for example,
Like taxes.
taxes would be one of them, right? Also, things like market volatility and being at the whims of the market at that given point in time. And it all sounds great when the market's up, which they always seem to assume. But when the market goes down, we've got some problems. Let's talk about some other things, maybe changes in interest rates, for example. Forever, it seemed like for 13, 14 years there, we were benefiting from ultra low interest rate environments. Home mortgages were 3, maybe 4%. All of a sudden, it seemed like overnight they went to 7, 8%. Okay. Let's talk about maybe some of the other living aspects of what these kind of policies do that we create for people. So first thing that comes to my mind is how many people do you know of that are socking money away in their qualified plan, and then all of a sudden they have a financial emergency. They don't have any liquid access to the cash.
I think they have to pay a 10% penalty for that if they would draw it out earlier.
As well as the taxes that they haven't paid yet.
That's right.
Okay. So it's a hefty penalty of 35% to pay to get our own money back. So liquidity, use, and control, obviously. Then maybe the living benefit aspect of these policies. Suppose something goes wrong with our health and that's unexpected, okay? Suppose there's an unexpected death, okay? And we are underinsured in terms of our life insurance. And then to me, at the end of it all is the estate and legacy aspect of what we do. What if we had a system, so to speak, that you and I can help create that takes all these variables off the table and the plan works no matter what happens?
I couldn't agree more. I think that too many people waste their money paying taxes. And this is a great vehicle to save money on taxes and have them deferred.
Well, and the other side of that, would you agree too, is always laying your head on the pillow at night worrying about all the variables that you have to control and all of the moving parts of your system when there's very little long-term financial gain to that type of system.
And you mentioned earlier with the qualified plan taking money out, this option has liquidity. You can actually borrow the money, take a loan out on your own money.
Absolutely. And the other side of that is too, in qualified plans, we're either in the contribution phase or in the distribution phase. We can't reverse course along the way. We have our money on a two-way street the rest of our lives. So if you want to know more as an advisor and you want to learn how to help put your clients in a much better position in a seamless manner, contact Troy or I, and we'd be glad to help show the plan that's going to work best for you and your clients. So on behalf of Troy Culver and Paul Bechtold, we'd like to say happy selling.